Okay, the beige book came out. Yellen said strong dollar, not a problem. The United States can continue to grow without the rest of the world. They still see modest, moderate economic growth. Market rallies. Big rally from 13 all the way up to 48. It's like, what, 35 points? So we've just got unbelievable volatility to work with, huge volumes. Everything is just really working in our favor. Okay, starting out this morning, early on, we wanted to sell the 59 to 61 area, 64, 65. If you'd been early, you could have gotten it done way up here, but going into the day, opening of the day session, our first update, we said 55, 56 with a backup sell at 59 to 61. The 55, 56 produced a trade that took the market all the way down to 30. We didn't really change things. We still like the short side of the market. The market rallied all the way back up to our original sell at 59 to 61. Had a retest failure, and you can just see that we're dealing with nothing but lower flows. The beige book comes out. Yellen makes her statements. Market rallies back up. Higher highs. So right now, looking probably for a close in this 35 area, maybe 38, somewhere near 35, 38, as it stands. The impetus behind all this buying came from short covering. I still think the longer-term player is looking for a place to get short. But the Fed doesn't mind selling. They just don't want the bottom to fall out of it. And you can see right here that players begin to cover. And then right in here, the beige book hits, and the market's up, out, and away. So we had a good day of trading. We caught the direction right. I know that was not too difficult to do, but our first 55, 56 sell level worked out fine, and our original 59 to 61 worked out great. Just blew right through our buy areas. We had an initial buy at 50, held the market right back in here. Then we had 40 to 42, and that just got smoked. The brief pause at the mean green line didn't stop it. Market gets back up to 59.60, then breaks. So great day trading the E-mini. Looking at the F2 screen, excuse me, the F1 screen. Lower high, lower low, sellers is what the screen tells you. Looking at the F2 screen, the market has retraced quite a bit, put it all together, and a D pattern when you look at TPOs, maybe with volume riding a little bit high in it, maybe slightly leaning P, but not by much, so a D pattern. And you can see the central price down in here would be in this 37 to maybe as high as 40 area. So if the market were to close right here at 45, sell one would be 50 plus or minus, and our 55, 56 would be sell two. On the buy side, 35, 37. Then bottom of value, 25, 27. I think the lower you go, the lower you are going to go, so you have to be careful where you spot your number 2 buy point. Okay, looking at the note, I had a significant pullback. Again, the FOMC will influence the way these people trade. They're much more fundamentally oriented than the stock market traders. We had almost a full point right here. So we got this breakout from the 2720, 2724 area. Should have some pretty good support right here. And the selling really starts above 29.16, but this definitely would tell you to be a buyer. In F2, and we continue to sell. Do a case split here, might pick up on it to show you where the buying and the selling is. We're at 04 right now. We've got some volume here at 8. We've got this 2-letter ledge at 20. So this 15 to 19, sell 1, and then our 27 to 31, sell 2. And on the buy side, we had the breakout from 128, so 129 to 01 will be buy 1. And then our 21 to 25 will be buy 2. But I don't think buying is over in the financials. We might get a correction. It all depends on what's done in the E-mini. And we'll be better able to assess that in the morning. Huge day, though. I mean, it's just, the market just went and went and went. And I think the definitely the buying above 130.12 was could have been some of the shorts throwing in the towel. Let's send this to 4 tick increments. Again, just a huge market, and we've retraced. We've gotten down to the breakout. New move out of the middle in L period, so we're at 43.19.20. The spill came from 44.12. So given the volatility that we have, we'll make 27.31, sell 1. And then we'll make 7 to 11, sell 2. On the buy side, we're at 19 right now, so we'll make 13 to 9, buy 1. And if the E-mini's in a rally, we don't want to get long this. If the E-mini's selling, we want to find a place to buy it. And then our move started down on the 42.23, which is a ways away. So 43, 7 to 11, we'll make it 43.1. 29 to 1. Now, if you don't have the capital and you don't have the fortitude it takes to trade these kind of markets, you really have to sideline yourself and just let the volatility come out, and it'll be out. And you might be on the sidelines for a day or two, but just a huge day. And if you didn't trade today and take advantage of the moves that we had, don't berate yourself and don't kick yourself in the rear because you weren't able to trade today. It was too volatile for you, and your subconscious or the rest of it did the right thing. They kept you out of perhaps a situation that you could not handle. I remember a long time ago when you knew the market was going higher and lower, but you couldn't pull the trigger at the market and get to take advantage of it. And the reason for that is that you didn't have the skills required to trade those type of situations. So again, we want to husband our emotional capital. We do not want to malpractice. We don't want to hurt our confidence. We want to take a solid approach to this. Okay, we guessed gold was going to close in the 40 area, 42. It's a little bit lower than that. Again, if the E-mini rallies back with any kind of conviction, what was resistance, 35 to 38, will now be buy 1. And it's going to be dependent upon which way the E-mini trades, and 30 to 32 will be buy 2. I don't think the risk of being in the stock market has left the market. We'll make 42, 45, sell 1. We're going to open it up a little bit, and then our 47.50 for sell 2. We do have news tomorrow. Industrial production's called up 0.4, and capacity utilization at 79. And AHB housing index at 59. All these numbers could come in lower than forecast. Philly Fed at 19.8. All of them, in fact, should come in lower than forecast. Okay, crude, big market, all over the map. The selling could stop in a second with the right headline out of Iraq or other places. The market has had, I mean, the articles yesterday and this morning were, you know, they've never seen crude this oversold. And you'll find over the long period of time that when somebody says don't never say never, the first thing you see will be in the futures market. So we had a rally of about $2.50 off the low. We're currently at 81.49. The top of value is 82. So 81.75, 82 is sell 1. 82 and a quarter, 82.50 is sell 2. On the buy side, we got down to below 81, so 75, 81 will be buy 1. And then 25 to 50 will be buy 2. But big markets, they are going for stops below 80. It's amazing how fast that happened. But it's the way markets work. They don't screw around. They don't wait, futures markets. So if we're supposed to go to 125 in the euro, we get there. If we're supposed to go to 80 in crude, we get there. And that's one of the reasons that a lot of people, when you first get started, you can't believe the magnitude nor the rapidity of the moves when you get into futures. And there are two types of personalities that play futures. They're the big market go-with types that want to jump on board and see how far the market will go, and they can prosper in these situations. There's the steady 80, work the grind, responsive trader that has a very difficult time responding to these markets. So we got resistance at 129 even, and we're right now at 128. Last rotate up was 18, so we'll make, I'd like to do this in London, this 28.10 to 20 area, sell 1, and then 40 to 50, sell 2. We're going to give it some room. On the buy side, this 75 area, maybe stops below 75, so 65 to 75. And I really don't like the buy side in this contract. I'd really like to get short in London. And it does that. So big markets. Lots of opportunity, but you also, the risk is commensurate with the opportunity. You have to approach this with less size usually and wider stops, but you can make the same amount of money that you could with more size and tighter stops when the markets are quieter and more calm. So that's it for today. We'll see you bright and